Hello friends, here again Professor Khanolkar. See, last time we have seen the financial structure of financial system, the structure of a financial system of our country we have seen. So as far as India is concerned, how the financial things go, how the financial things, finance is being controlled, that is which we have seen in the last discussion. Now, by that, it is very clear for us that the financial system of any country has got a same type of same type of structure, you can say. The names of the concerns and institutions are different, but the overall system, financial system, works in a similar fashion of various countries. So, the financial system of any country has five major components. So what? Now we are studying the components of financial system. So following are the five components any particular country's financial system have. So the list is given below. First component is the regulatory authorities. You should keep it in mind. The first, it starts with the regulatory authorities. Secondly, the financial institutions and the intermediaries. We will discuss it in detail somehow afterwards. Third component is the financial instruments, or you can say securities, financial instruments and financial securities. This is the third component. And the fourth component is the financial markets. Financial markets. This is a fourth component. And lastly, financial services. These are the five components. One by one you have to express. Most of the times this question has been repeatedly asked in the examinations, which are the financial, which are the major components of a financial system. So such a question you should be in a position to answer briefly about the 1, 2, 3, 4, 5 points, that is financial authorities, financial institutions, financial instruments, financial markets and financial services. Now coming to the first one, that is the regulatory authorities. What do you understand by regulatory authorities? Already I have discussed in my previous class, that the regulatory authorities are those authorities which regulate and control the affairs of finance. So in India, we said the regulatory authorities, Central Bank of India. Usually, regulatory authorities of any country are the finance ministry and the central bank of that country. These two important, and then other regulatory authorities like various specialized institutions which are established, like in India, SEBI is there, and IRDA is there to control insurance business. Similarly, there are various institutions which are specially being established by the government for controlling the financial affairs or controlling that particular institutional business, etc. And these are the authorities which are having control over the financial system as a whole, which are having the control over that particular area of their working. For example, now area of working. Example, if you want to take SEBI, if you take in India, what SEBI does? SEBI sets the rules and regulations for the control of overall securities business, securities exchange business, buying and selling of shares, transfer of shares, hypothecation of shares, pledging of shares, also permission it grants for the issue of shares, and so many. And all these rules and regulations set by these institutions, that is regulatory authorities, must be followed by the concerned businesses, by the concerned institutions, which they come under the purview of that particular authority. So when the authorities are there, it becomes the part of what? Regulated market. So yeah, actually last time we have seen regulated and non-regulated. That is organized and non-organized. Here, organized financial system is one wherein you find what? Regulatory authority is the first component. Coming to the second component. Which is the second component now? Financial institutions and financial intermediaries. What is the institution? Financial institution, for example, you can say any institution which works as an intermediary or like an agent, it works. Similarly, even a banker also is a financial institute. Bank acts as a middleman in between the lender and the acceptor of money. You see, what is the business of bank? Bank is accepting deposits and lending money. So what it is doing? It is doing the role of, it is complying the role of intermediary in between the people who save the money and the people who need the money for the business expansion and so on. So this bridge is being gapped. This gap is being fulfilled by the bankers. So bank is that institution which supplies money, but from the money comes to the bank. Of course, even the money come to the bank from the people. Those they are having excess money. From the excess money, from the savings of the people, those they are investing, having excess money. These monies are being deposited by the customers to the bank, and these monies are further lent by the bankers to the needies, the people who want the money in turn to establish their businesses and run their ventures and so on. So this is one thing, that is institutions, financial institutions. The players are there. What do you mean? Again, I have explained to you. Financial intermediaries. Players are also the intermediaries. They also play in the market. Intermediary role they fulfill. The market, they purchase the shares and they sell the shares. No? Financial players. For example, if you take intermediaries, or you can say if you take the financial players in India, in the capital market in India, who are the financial players in the capital market in India? All those, they are the intermediate, like share brokers are there, underwriters are there, then traders are there, jobbers are there, portfolio managers are there. These people, they are the intermediaries, and these all peoples are called as a players. Why they are called as a players? Because they participate in the game of playing what? Playing in money. What is buying and selling of shares? It is playing in money, like cricket only. Cricket is what? Participating in playing with ball and bat. Here it is participating in playing with cash in hand. See, with cash you can buy and sell and make money. Money makes money. It's very important principle here. And then coming to the next component, intermediaries, and then coming to the next component, there is a financial securities. Now, see, financial securities must be there, with which only the players play. Financial securities, like the equipments, are the bats and ball for the cricketers. Without the bat and ball, the cricket will not be there. Similarly, without the securities market will not be there. Securities Exchange Board, Securities Exchange Market will not be there. National Stock Exchange. Securities must be there. So what are the securities are? They are the instruments. Securities are nothing but the instruments. That is the third component we are studying. Third component is the instrument and securities. All the instruments of financial nature. It even covers this checks and FD receipts, and even say share certificate, debenture certificate, bonds and gold bond certificate, everything. Any certificate which carrying some value of money that it carries, and that is called as instrument, or it is also called as security. Instrument or security. That is the third part, or the third component of a financial system. any system. Then fourth part of the financial system is the financial market. Now, financial market, of course, what are the financial markets? We have studied already in terms of Indian financial system. We have studied there are two types of financial markets in India. One is money market, and second is a capital market. Money market, I have covered that portion in the last class. Money market deals in the short term securities, whereas capital market deals in the long term capital, long term securities, long term funds, short term funds and long term funds. Short term funds, which is being dealt with by the money market, long term funds, which is being dealt with by the capital market. Short term funds, see, bankers and all the financial institutions and even the insurance companies and all other institutions which are engaged in day-to-day financial activities, all finance companies that you find, all financial cooperative societies, all those people, they are what? They are the part of money market, not capital market. These people they do, or these people they help the people of the country with the short-term needs of immediate money needs of the people. So term loan and other types of various types of loan, gold loan, and so many gold loans are there which the banker offers. And then coming to the other part, that is our capital market, which deals in long-term capital fund. There are long-term capital or long-term funds. Now, why do we call it as a long-term funds? What is that duration, time duration? What is short-term and what is long-term? How to determine? Usually, the funds which we are requiring for a year period is a short-term fund. Day-to-day affairs, working capital needs, these are the short-term requirements, short period requirements, and this is being very well handled by the money market institutions. Whereas the long-term funds are required for raising long-term funds, the corporate sector companies, they are taking the help of the capital market. So in the capital market, therefore, there are another two types, mainly primary and the secondary. Primary market is one wherein the primary market is dealing with buying and selling of securities, of course, and raising of funds by a corporate sector first time raising of funds from the capital. It is also called as a IPO issues. That is, IPO means initial public offer. Initial means first, public offer. So first time whenever the company comes into the market, it to raise the funds from the public, it invites the public for the subscription, and it collects the money from the people, and it issues the shares to them, and this is through the primary market, what is called as, it is a part of the capital market. First part, that is a primary market of the session, primary market part, from which these corporate, they fulfill their raising of long-term capital issue requirements. And then secondary market is there. Once this issue is being raised, then all these securities are being issued. That is the shares and debentures which are issued by the company for the first time. They are being issued to the people, and then these people, they are having these particular funds for the liquidity purpose. The government have established the stock exchanges. That is another part, we will see afterwards, after the institution. So all these things you have to keep it in mind while so all these securities and instruments, third part of the financial system. Now coming to the fourth part of the financial system. What is the fourth part of the financial system, or the fourth component of the financial system? It is, of course, the financial markets. As all of you know, there is these securities are there, monies are there, people are there, they are called as the players. Then where they do the work? Market. Market is a place where the people gather together, where they get fulfilled. They buy their commodities by paying money. Here, financial markets are those markets where the people come together to exchange their investments, to exchange their shares and debentures. Hmm. The people who are interested in selling, they sell their stocks, shares, debentures. The people those the people who are interested in buying, they also come there in the market, because market is a place where these things are available. The shares and securities are readily available, and that is what we call it as a Indian stock market. We call it as National Stock Exchange, the recently introduced, no, recently developed one. Previously, the Bombay Stock Exchange, the very famous stock exchange, I think, perhaps the first and the foremost stock exchanges of Asia, Asian stock market. And similarly, now National Stock Exchange, with all the technological developments, have come into force, and it is working full-fledged. It is working from 9 o'clock morning, 9:15 exactly to 3:30 every day except Sunday and Saturday. It works for 5 days. Every day it works. And the people, when the market starts at 9:15 in the morning, they have got the people, they can use this particular market mechanism to sell the shares and to buy the shares using the using the terminals now, because online trading facility is being provided nowadays. Previously it was not so, and with the technological development and breakthrough, the turnover is also increasing. Government is also getting a lot of securities tax and lot of income with which, and the people are being benefited. They are, liquidity is very easy. Those people, they have invested in shares, they can convert their shares into money and convert their money into shares as and when they want, you see. Only the Saturday and Sunday is a holiday. All the other 5 days, the market is open for all the people in India, and the trading can be taken place. And where these marketplaces are the mechanism, it is a mechanism. What is a market? It is a market, financial market. It is a place, or it provides what, a suitable mechanism to all the players and institutions to deal in the financial claims, to deal in the financial securities. You see, so that is what about the markets. Markets must be there for, fulfilling the needs of the people. This market is one. And the last one is the financial services. Now, what are the financial services? Those services that they take place in the financial markets are called as the financial services. For example, you see, financial services are provided by all the financial institutions in the country, in any country, particularly bankers. Banking concerns, non-banking concerns, cooperative concerns are there, and then banking services are there, merchant bankers are there, leasing and hire purchase transactions are being there. That is also there are the financial services. Guaranteeing of a portfolio management is there. Guaranteeing is there. Portfolio management is there. Underwriting is there, and many other services like, custodial services are there, credit rating services are there, factorizing and forfeiting services are there. All these services we are going to study in detail in the days to come in this particular syllabus. So it's enough for the today, that you have to remember only these 5 important components. The question is being all the time asked, and you have to write the answer, just giving some brief explanation on each of the points of these 5 components. The first component is the regulatory market, second is the financial institutions, third is the financial instruments, fourth is the financial markets, and lastly financial services. Here we are completing, see, here we are actually completing, or we are getting the knowledge of how a particular financial system works. So in the next class we will study the meaning of the various you can say financial markets, meaning of various financial market in detail, and how they work, how the work is being conducted in the market, how the full-fledged things are being carried out there. So have a nice day and enjoy this particular listening, my dear students. Bye. Good day.